Hey everyone, welcome to another video. Thanks for clicking on this. I hope that you get everything that you were looking for out of this video. This video in particular is a trading recap. I traded 3 sessions this week so far. We're on Thursday. The first session that I traded was Asian Sunday Open. A trade recap is already live on over, I think it was 48R, 46R that I got on Sunday during the Asian Sunday Open. Today's video is going to be the second session that I traded, which is on Wednesday, December 8th. This video in particularly is going to cover how I trade the news, what I'm expecting when I'm trading the news, what I'm looking for, how I see price setup, where I set my entries and my exits, and how I get seconds time frame entries. So I haven't made a video on this yet. I haven't in the past really done seconds time frame trading, but this week in particularly, it has done very well for me. This has probably been one of the best weeks that I've had. I've already up over 100R on just 3 sessions, which is less than 6 hours of trading probably. So let's break this down. Today we're focusing on the news in particularly. So Wednesday, December 8th, my time frame, which is during the London session, we got the European Central Bank president speaking. Not necessarily it's always going to be high volatility movements because of these things, but what happens is these events are catalysts and they serve as reasons to move the market, not necessarily something that he's going to say is going to massively move the entire market. Sometimes it does, but it's not necessarily always the reality. One thing that we can look for is what is price doing before news comes out and what is price doing after it comes out, because you'll usually see setups are basically presenting themselves, and you have a good access to very tight entries with and you can write a lot of the volatility and get some really good high RR trades. That's what this video is about. We have 4 trades. We had 0 losses that day, 46R. So let's get into it. We're going to start on the higher time frame. It's full screen. Perfect. So right now we're going to take a look at the 4-hour and the daily. So basically my markups here, you can kind of see that I'm focusing on 2 main zones here with the tap of this daily on the weekly. So if we zoom out, right, this is pretty important to just keep track of. I like to pay attention what has price been doing in the past here. So, relatively important is the pullbacks that we can expect, right? So as you know, lately, the Euro US dollar has been pretty bearish, right? So what can we expect? Although price is very bearish and you see a massive extension of this leg, we have a lot of unfilled areas that eventually we will have to come back to mitigate. When we know that there's something there that's unmitigated, that's what we look to use for potential pullbacks. Now if Euro US dollar is very strongly short, it's going to run through these zones. But what we're looking for is reactions to these zones. What does price do when it comes in? Because it will present another opportunity for us. And that's usually what happens. So if we look here, and we're not going to go too much on a lower time frame on the past to focus on that, because although it's relevant, it's not necessarily the most important part. Here we can see there's probably some sort of, is this a flip zone? Yes, I marked it as a flip zone. So in here there was a supply zone. What do we get? We get price gives a reaction to that supply zone, pulls back, creates an extreme, and then runs through it, right? So when we get price running through it, we're looking for basically where is the point of failure? Where did price pull back to form some sort of extreme from the reaction that caused that break? You can see how strong that movement was. In this case, what do we get? Another reaction of some sorts. We get this massive wick that comes in, taps the highs, some sort of reaction that we got on a lower time frame that I decided to mark out this zone that was responsible for a clean break with candle closure on a higher time frame. What do we get? Price came up. We basically were trying to figure out why did price react to this zone on a lower time frame, probably the 4-hour. We have price reacting to here, and what it does comes up, mitigates the supply zone that basically helped break structure internally. Price came back down, created equal lows, right? And what do we know about creating equal lows, especially really close to point of interest? Those get ran. So price came here, ran this sell side or the buy side liquidity, tapped into this POI, And what do we get? An aggressive reaction upward. Price pulls back. This is an unmitigated zone that was responsible for creating the official reaction that ended up breaking structure out of the zone with wicks. And then we get what? Price basically continuing going long that created this massive push up, right? So this is going to be a very important place that we're looking for reactions. Anyways, on the time frame that we're particularly looking at, where we had this zone right here, this is an unmitigated zone that while it was tapped because of the liquidity that we ran, there's still a lot in here because this is how big of a zone. It's a 20 pip zone, and we probably just came in 4 pips into this zone, so we still have the majority of it. The equilibrium was not tapped, and that's why this place is specifically important to catch an entry. Now what do we get? If price comes down and sweeps and breaks this structure, we're basically looking to continue short, unless this was a sweep that gives us a change of character on a higher time frame to continue long, right? So what I'm trying to focus on is the reaction to this zone. How price reacts here is going to tell us a lot about the trade that we're taking right now. So let's move forward. Perfect. So what do we get? Another tap. So on the daily time frame, when price came down short from this, what did we get? A tap. And this is probably what? The same, probably equal lows. This one's even smaller. So this is about sub 4 pips into this zone. So what did we get? Another mitigation, but at the same time, we technically have a double bottom that was forming here. You can kind of see one low, another low here. And what do we get? We still got a very aggressive reaction, but what did this reaction result in? So let's take a look. We're on the 4 hour now. The reaction we got here, price pushed up. It's very low momentum. There's not massive candles here. Price is just lightly pushing up. We get some sort of accumulation here that what? Creates a strong break to the upside. And what are we looking for? Price is pushing up to probably mitigate something or take out some sort of level. We have this low right here. We have basically equal lows from 1.2 points here. Price runs up, sweeps this 4 hour because what? We have 1, 2 relatively equal highs here. And what do we really have that's important to look at? A 4 hour unmitigated zone, right? So price came in, ran the liquidity that was right here. This was inducement for the run up here. What do we get? Price wicks into that zone. And what do we get? A very aggressive push back down. Price did not close down here. Therefore, we had a massive wick that what? Ran liquidity, swept equal lows here. And now the reality is, if we're going short, we would like to see some sort of candle closure below here, which we did eventually get, right? Now, if we're looking at the internal structure from this low to this high, or from this high to this low, we get what? We have some break of the lows here. We have structure continuing its bearish intentions because what? Who was in control at this point? We just tapped, mitigated, and had an aggressive reaction to a 4 hour untapped supply zone. It's now been tapped. So what do we get? We're trading from zone to zone. So from this 4 hour, what are we targeting? This 4 hour accumulation. We failed to tap it here. All we did was sweep, and therefore what is price going to do? It's going to continue down to eventually mitigate this 4 hour zone. And so that's why this is going to be an important lesson, and particularly no matter what you're trading, you have to remember that a lot of times 4 hours will push to 4 hour zones, 15-minute will push to 15-minute zones. So whatever you're trading, you have to be aware of the higher time frame intention. This daily demand zone could push to a daily zone, which, as we know, on the daily time frame, what do we have? This was a daily supply zone from this entire candle body. So if I was just going to highlight this in particularly, let's just, just for the sake of this, when price came from this daily to this daily supply to daily demand, what did we get? An aggressive reaction immediately to what? Daily supply. It swept the daily supply and tapped an unmitigated 4 hour level that was just above that zone. So that's why it's important to keep an eye on what price is reacting to, because had you not known about this zone down here, you would have not known why price came down here to push back up. You would have been a little confused thinking it's just some regular pullback, and while it could just be that, it's good to be aware of what's happening. That's why you have to build a story, right? Because that's going to be a very important level that we're going to be looking at. This is going to be targeted eventually. We now have relatively equal lows, and eventually price will have to break down and come to what? The next levels. So that's on the daily to the 4-hour intentions that we're looking for. Now, to really get into the trades that we're looking at, let's talk about the supply zone. Now, on Sunday, I broke this down with a lot more depth, in particularly about what did we have? We tapped the 4-hour, we broke the daily, and what do we have? A new tap of this daily accumulation here, and price is reacting aggressively upward. Now, we had the formation on the 15-minute more particularly, but also on the 1-minute time, or the 1-hour time frame. So from the 1 hour to the 15 minutes very clear. We have a supply chain that's forming to the downside. Tapped here, this one breaks structure. What do we get? This one came down to tap what? The low of the range, the bottom of the range. You know, maybe not the cleanest, but still tap the low. Price broke structure, price comes back up, mitigates what? Something in here. What does it do? It's pushing price down during Asia session very aggressively. What does it do? Taps some demand, right? We get a push up, but this is a very weak level. As you can see, we did not even come up to tap this zone. All we did was mitigate something in here on the 15-minute. Price comes back down, pushes one quick mitigation here, breaks internal structure, but leaves the swing low, taps it. Actually, what do we see? It actually looks like it may have made equal lows or taken it out. Probably equal lows. It's really small depending on the broker you're looking at. Price pushes up. What do we get? On here, let's go back to the 1 hour in particular for this situation that we're looking at. Let's get rid of this 3-hour bar. Alright, so what do we get? On the 1 hour, and this is why it's important to use several time frames to understand what's happening. Sometimes I have my charts set up with just 4 or 5 time frames, but other times it's very helpful to have a little bit of everything. Let's take a look here. We have these, well, to start, we have this massive wick here that came up to sweep all of the structure in here and came to mitigate something in here, had an aggressive reaction push down. You can see right here, but what? Failed to break structure. We get another push back up here, but we could use just this wick on the 1 hour for what? To see that this is unmitigated, right? So price has to come into here before we get some sort of reaction to push down, unless we leave it for the future. What did we get? A 1 hour tap into this 1 hour wick supply chain, right? So confirmation, right? If you were looking for a 15-minute, you would have missed the opportunity, because usually, and that's why it's important to look at different time frames. Check this out. If we only highlighted the wick in this case, we would not have gotten a tap and no confirmation of, the supply chain being mitigated, and that would have been an untapped zone that could have been more dangerous to us later. So that's why it's important to look at different time frames. In this case, we're using the whole candle. It's a massive candle, in my opinion, for the time frame we're trading. It's a big wick, right? 12 pips here. No, we don't want to take an entry on 12 pips, right? And at the same time, we're waiting for the news, right? So let's see, what do we have here? All right, so on this time frame, we already tapped the 1 hour, so that's been mitigated. What do we have here? We have two things we're paying attention to that we want to look more in depth on. Let's look at the 9-minute. I marked it 9 for a reason. That's because it's kind of one of those odd lower time frame setups that I'm looking for. What do we get here? Price build up relatively equal levels. What do we get? Break to the upside. This break comes in, taps this zone, pushes back down. What do we get? A sweep of this liquidity here. We don't get a candle closure, so we like to trade away from sweeps. And this sweep, what did it do? Not only did it break here, but it also took out the low that was responsible for that push up. So if we're going long, what are we looking for? We want, once again, the lows to be protected, and we want the highs to be taken out, and the highs are weak, right? So protected and targeted if we're going long. But when we start attacking the lows, we're basically initiating a change of character, because we're starting to see some weakness once we get to a point of interest. So you can see here on this lower time frame, what do we have? Price broke or made equal lows here. Price is kind of trying to be bullish to push itself back up to mitigate some sort of level up here. If we do this, let's highlight that candle on the 9-minute. Let's do this. This is the 9-minute. Price is being a little bit bullish. We get a break up, takes out liquidity from here. We have from this low here that we're paying attention to. Price breaks the high, pulls back, creates a new high, but it's a sweep that mitigates this time frame, which now this is a 9-minute point of interest. The 1 hour was also mitigated by this, and the 15-minute was mitigated by this, right? Price aggressively pushes down, takes 1-2 points of structure, breaks down, gives us the intention that it's going to go bearish. This is the same time that the news is coming out around, 12, what was it, 12, around midnight basically, which was basically within London. This is when this trade is happening. So price pushes down very aggressively, and what do we get? If we look at, I believe this one was what, the 25 minute, so let's take a look at what happened in here. So let's go to 25. All right, we have a mitigation and a sweep of internal liquidity here that look at how massive this wick is on a 25-minute chart. We have a sweep inside here. Let's get rid of that. Took out this level, and what did it do? It mitigated the wick or the body of the 9-minute candle within here. So what do we have? Further confirmation of supply chain being tapped. We want to go bearish, and what do we get? Massive push down that breaks more structure. We actually break 1-2 points of structure, and this is where we tap the daily demand zone, I believe is what it is. Let's confirm. No, this is the daily demand zone. Sorry, this is the 4-hour demand zone, a 4-hour accumulation. So officially we've broken this low, right, which was the massive wick. We've confirmed because we've closed candle closure below here on higher time frames, and we tapped this level. What do we get? Price is starting to change its character because it's going long in the short term. We're also understanding we're constantly mitigating the supply chain. So we're further confirming the strength of the sells, and that's important, right? Because we're now looking for shorts. We had a short reaction to the news that was in here. So what do we get? We are now awaiting an entry for when price comes up to tap the reaction and the last unmitigated supply chain. Because what do we get? This is basically a liquidity point of interest. Not only because this is just an unmitigated wick up until here, but also because this particularly took liquidity and mitigated an unmitigated zone. This is now unmitigated. So this is the point of interest that we're focusing on. We're looking for reactions here. Now, if you were trading, and like many people, you like to set risk entries just because you saw a massive reaction, you'd be very disappointed to get stopped out by probably sub 1 pip or 1 pip, right? So the whole idea behind the way that I trade is it's a reaction-based trading system. So I trade the reactions to my point of interests. I do not trade risk entries on something that just happened earlier in the past. No, I look for confirmation and I take confirmation entries only, right? So let's focus on these zones. We're going to remove some of these. Let's go to let's focus on what happens here, right? So we're trading reactions. So my entries are somewhere in here. We're going to pay attention to what happened. We also know that we swept this level, right? But let's see what actually happened in here. Let's go to the 15-minute. See, what do we see here? Let's check this out. That's what I'm focusing on. So let's go to the 5-minute. All right. So here, we already came into the zone. So this is the high of the zone that we swept. But let's take a look at this. I have marked a couple of different things I want to go over. So here in particular, what do we have? The last place at which, and maybe this will be better seeing on a slightly higher time frame. 10-minute looks good. Let's look at the 15-minute. All right, so if we're looking at the 15-minute, we get two things that are interesting. We have this point of interest, which is this should be a demand, so let's mark this as a demand. This was a demand with an inside bar that was basically responsible for pushing price into the point of interest. So this is basically the last sell candle here with the last unmitigated zone that has been responsible for pushing price into the point of interest. So this is a level that either we are going to, if we're going bullish, we're going to react going long from here, or if we're going short, this is a level that we're going to sweep, right? And you can kind of see in hindsight now what's going on. But when I was marking this chart up, when I saw this reaction, what did I get? I basically saw a change of character of price. So price pushes up, we have a pullback in here. Let's take a look at the 5 minutes so that maybe we can clear this up a little bit more cleanly. Let's take a look at this 5 minute. We're going to go to here. All right. So what do we have? Price pushes up. We're reacting to something in here because what? Here's where we get a pullback. Now the point of interest might be this entire zone. The reality is, let's see if I can just hide this one. I don't want to see this. Where is that at? Let's remove that. Oh, we might want to look at it later, so let's see. We're going to, where is this on? That's on the 1 hour. Okay. Let's hide that. All right, so here we are. We are paying attention to the reaction, right? So we have this big zone here that is about 8-9 pips about. We're looking for when we get a reaction in this zone. So price didn't react to anything in here. So obviously we're looking at a time frame that there's going to be something that it reacts to in this candle body, something in here that was reacted to, right? And so when we get a reaction, that's when we're paying attention. So this was a push back, a pullback that what? You can see that we didn't make higher highs on this one. So this was an inside bar. So this was a genuine pullback on a lower time frame. And what do we get? An explosion of price comes up, and now we get the creation of what? This high. This high comes up to mitigate something up in here, because what do we get? A push back down on price that breaks this. It's probably a demand zone in here on a small time frame, but it's irrelevant to this. We're pushing down. What do we make? We're making equal lows. So in this case, what do we have? We have a buildup of some sort of liquidity here. This is important. We don't like to see equal lows because we target equal lows and equal highs, right? Then what do we get? Price pushes up from here. Kind of a big candle, but still we still have a bearish engulfing here that we could not break out of. We pushed up. What do we have here? The creation of more relatively equal levels. We now have liquidity on the top, and we now have liquidity on the bottom. So the question is, what are we going to sweep first? Based on this point of interest, we're paying attention for short opportunities, right? Unless we break out of this zone, then we could be, we could continue to go bullish on this lower time frame. Instead of being a pullback that we'd expect here, we'd expect continuations, right? But we now have liquidity on both sides. So let's see who gets taken out first. Price comes into this demand zone in here. This low was responsible for pushing up price and took out this high. So now we're looking at, okay, well, if we're going to go bullish, we are going to protect the lows. Once again, we've added another relatively equal low here. 1, 2, 3, right? We've broken structure to the upside. If we're continuing, the low must be protected and the highs will be targeted. Therefore, if we're going to continue this, we would see reactions like this. We would not break any lows. The reason why I have this marked as a change of character is because we do get a break. So let's take a look at this. So the moment that this happened, once we broke structure to the downside, what do we get? A change of character. So price swept the highs, swept the lows. We get candle closure below, pretty small on this time frame that we're looking at it. And what do we have? We have this zone in here that is unmitigated. Basically, we have this pretty large area right here. This is a point of interest that we're looking for. And price, this was responsible for the break in the structure, right? So now we're looking specifically for shorts. This is further confirmation of bearish intentions. Did we react to the point of interest? We did, but we had a change of character after sweeping the highs. So that's why risk entries would have not worked. Now, probably this was a mitigation of something in here that was untapped, even though we did mitigate part of the zone, probably to like the 25%. Maybe the 50% was untapped, and that's something that we just tapped with this one. We're not so sure because we weren't paying attention to that, but it's irrelevant because we did get our confirmation of bearish intentions. We now swept and broke, took liquidity from the highs, and we took liquidity from the lows. So now we're more than likely going to look for continuation short. We see this aggressive reaction that swept the news reaction that we got earlier, and this is what we're going to be looking for. I'm going to show you how I got my seconds entry, right? So on a 5-minute time frame, I believe is where we are right now. This is what it looks like. I like to get my entries on the 1 minute usually, but if you can't get something clean, I'm going to show you what I basically got. So let's make sure this is set up right. You can see everything here. All right, so what do we have? You could see this as relatively equal highs. You could see this as liquidity, right? But we also know that we swept. And so what we got here was price pushing upwards, made a tap up here that swept, broke structure to the downside, broke 1 point, broke 2 points of structure. So what do we have? Confirmation to go short. An entry that would have been very aggressive but could have been taken is something in here like this, right? And you could have had this first entry. But the question was, we didn't have a change of character yet. So it would have not made sense to look for that type of entry because we did not yet change character on, let's say, the 5 minute, right? Or the 1 minute. Therefore, we are awaiting for this change of character to occur. Once this point happens, we are now made aware, after this point, that we are looking for shorts. So this is the moment. Up until here, we're sitting on our hands and we're being patient, waiting for our opportunity. That's how you get the best trades, being patient and being very strict with the type of trades you take. So anyways, let's go down to a lower time frame to find a point of interest. This is how I trade the seconds. We go down to the 30 seconds, and what do we see? What I'm basically looking for is an unmitigated zone that was completely engulfed, that created a break of structure. So on the 30 seconds, you can see this zone right here. This was a unmitigated zone up until what? Price came up to mitigate this zone. It's very clean. It's almost insane how accurate it is to look at the seconds time frame. You can see this. Let's see if it will even let me pull it apart because of how small this is. Right here. There we go. Look at how perfect that was. It mitigated this inside bar and it didn't take it out and it just turned back around. So that's how we can get very insane tight entries. So on the 30 seconds, this is what I'm seeing. This is the point of interest that I'm looking at. Let's make sure we get the whole little bar here. I'm going to do it like this. Now, one thing to keep in mind is my chart looks a lot cleaner because I have this indicator. It's not an indicator, but it's like something that makes it easier, right? This is what the 15 or 30 second chart looks like right now. There's a ton of gaps. Something that makes it easier, which I would recommend, is you get this little thing here. It's called no gaps candle. All it does is it fills in empty spaces. Look at this. Let's see. You see how clean that is? It fills in the gaps because that's important to see. It's easier to miss places when you don't have, when you're filled with gaps in your chart, right? Especially when you're trading 5 second, 15, it just gets insane. It just doesn't make sense. So that makes it a lot cleaner. So this is my point of interest now. And the reason why I'm looking for that spot is because what? We had push up here, mitigated something in here. This wick mitigated this level. This push up mitigated this wick, came down. We have what? Inducement right here. And this is insane, but it's on a 30 second. We have inducement of liquidity here. And then price pushes up, mitigates what? Something in here. This is basically a gap in this market somewhere here. Let's take a look. It mitigated this inside bar. So that was very clean. And then what do we get? Push down, a pause, and this is this could be considered the extreme, the push down. And that's where we had the largest engulfing candle on a lower time frame, on like the seconds time frame, that broke structure. So this is my point of interest. I am now looking for an entry in here. And while that sounds insane, I could take a 0.2 pip stop. And that would be my trade. This is where I'm trading from. I'm going to show you guys how I did this. Now, here's the thing. While that is true, that's the zone that I'm going to be trading. One thing to keep in mind is that, well, you have spread. So you're going to notice that I'm not taking a 0.2 pip stop on my trading account because I have a spread from anywhere from 0 spread to 3.3 pips, right? So I like to just keep it sub 1, but I don't like to go super low on some entries. You're going to see how we handle that, right? So now we're looking at this. We broke structure to the downside. We've got our change of character confirmed, right? And now I'm looking for price to tap into my zone. So let's see, we're gonna set up entries here. So I'm gonna want to have one entry. We'll go one by one, right? So let's go like this. So my first entry, I want to enter when price comes into here, right? And what am I gonna do? Well, this would be a 0.2 pip stop, and it would have been it's almost a 70R trade. To be safe, this could also be considered unmitigated. So I'm going to just put my stop just a little bit above, which is just equal highs here. I'm covering this just in case, right? Because, you know, volatility, we reacted to news. We just had a change of character. But if we react to something in here on the 30 seconds, I want to be aware of that, right? So now let's press play. This is almost as if you were watching it live, right? And I'm doing this on seconds time frames, right? So, whoops, let's get closer. All right, so what do we have? Inducement of liquidity here. We have a tap that basically failed. Let's go a little slower. Let's move back here so that we can catch that with some time. All right, so what do we have? Price is coming down, we break, we get a change of character, price comes up here. We have a buildup of liquidity. Price attempts to touch the point of interest, but fails. What do we have now? This is basically inducement. We have people that are going short from here to push price down. And what do they think? Because this broke structure again, they are now believing that this is probably where we're going to short from. So they're looking to short inside of this cluster of orders here, right? We're going to slow this down a little bit. Now what we have is price comes up to tap here. We're getting a pullback. People probably would have thought that they missed the potential for the entry, but let's wait. Let's be patient, right? We're waiting for price to tap our zone. See here. Tap. Boom. We're triggered into entry number 1. So what did we just get? We got an entry that did what? Look how perfect that is. This wick came in just a tap, just to the 50%, the equilibrium of this 0.2 pip stop loss. It came 0.1 pip into the zone, which is just insane, right? And now what are we looking for? We're looking for an aggressive reaction to trade away from here. That's important. If we don't get an aggressive reaction, then, you know, we may have messed up because price could just run it, right? So let's go to the 1 minute. Whoa, look at that. That's insane. Look how aggressive that reaction is. Let's see, where is this candle? There we go. Look at how insane this reaction is. We basically pushed with so much power that we took out 1, 2, 3 levels here. And at this point, I may want to go to break even. Now, we're going to go over this in a second, right? Now, here's the important part. Isn't it insane how price can react so aggressively? Now, remember, we're on a lower time frame, so it might not look so big, but 10 pips so far. 10 pip of a reaction to a 0.2 pip zone. That's insane. That's why this is so important to learn how to do this. We got a change of character. We have confirmation that we're switching from bullish to bearish. We're continuing the higher time frame supply chain, right? What do we get? Because we know that we've been building up supply chains on what, higher time frames, that's what we're looking to form on lower time frames as well. This is supply chain. Reaction here. What do we get? Aggressive reaction away that broke structure from what, a probably 0.2 pip stop, right? We have this unmitigated zone. Price comes in, breaks structure, officially gives us change of character. We have inducement of liquidity, which is important because we have no liquidity in here, which meant this would have been swept, right? Now also on the 1 minute, we have this wick that kind of swept some liquidity in here, right? So that's important to keep in mind. That's why we covered that level, right? Price comes in, taps, massive reaction here. So now let's await, right? At this point, now what do we have? We have another point of interest because price ran so quickly that we are still waiting to see if price will come back into this zone now. Let's do this. Demands or short supply. We get such an aggressive reaction to this zone that we probably have something unmitigated in here. And therefore, because I know that we moved away so quickly, while many people on the 1 minute would have already put their order to break even, I did not do that, right? And so some people would end up regretting that, but let's see what happens, right? Let's go back to a 30-second chart and see what happens. Look how quickly price is pushing back up. Tap. Look at that. What did that tap? Once again, look at our point of interest here. Check this out. Look how insane that is. It tapped into the zone. Now, spread would not have put you in, right? Spread would not put you in because what? Spread is what? 1.1 pip to 0.3 pips. This is in by not even a 0.1 pip, right? So had you had the same entry, it wouldn't have worked. But that's why we're trading off what? This order block right here. And let me show you my second entry. Let's see, is it this one or this one? There's one in here. Perfect, that's it. Let's get it down. Perfect. So look at this. Same stop loss. Why? Because I am just aware that these could now be equal highs and they could be swept. Unlikely, but there is that potential. So I'm keeping that. So this one is a 0.9 pip stop. This is a 1.2 pip stop, right? So anyways, let's see what happens here with this reaction. Let me just make sure what we're looking for the next one. All right. So now what are we getting here? Price is building up some liquidity for what? To run lows. Let's see what we get. All right. So look at that. Let's see. This was probably on a 1 minute. All right. So what do we get here now? We broke structure to the downside. Now we're doing this on very small time frames, right? So, but it's important to take note, right? So we have one break here. Let's mark this out with multiple points of structure. Push down. Price comes in to mitigate this zone. Pushes down, breaks structure again. What do we have? Another point of interest. Look at this 1 minute order block. Now remember, on the seconds time frame, we would not have been able to see this. And that's why it's important to keep in mind that when you are trading seconds time frames, that you also have to see the 1 minute constantly, because you wouldn't see this order block on a 30-second necessarily. It looks like this. It's not very clean. The 15-second, most definitely not clean, right? We would have probably looked into this. But anyways, we're on the 1 minute. So let's take a look. We're going to put my last one on here that we're going to look for in a minute. Now, because this was the extreme of the move that broke structure, we're looking for another mitigation. Let's take a look. Tap. We're in. Look at that. That's insane. But we're in on this trade. Perfect. Now this is a 1.2 pip stop. We could have set an entry at equilibrium, which would not have been tapped. I don't think it would have been tapped. I think it trades away from here. But that's why it's very important to also keep in mind what have we been mitigating recently. And also, you know, when you have a 1 pip stop, it'll be insane to just cut this in half, because you know, if you want to have a 0.5 pip stop, you might just not get triggered in. So you can't be greedy either. So let's go back. Let's continue this. See what happens. Boom. Look at how that is pushing. So let's pause there. Check this out. Do you see how aggressive this engulfing candle down to the downside is? When we've seen these on the most recent time frame, we're looking at the 30-second. Let's look at the 1 minute here. On the 1 minute, whenever we've seen these, we've come back to mitigate the extreme, right? So in this case, I think that was a 5-second entry. Let's take a look. I believe so. So the way that I saw this was, and this was, it's crazy, but I actually did take these. Look at that. So what do we have here? We have this. We're just marking out some zones here. Extreme, break. We have a lot of untapped zones in here. But the one that actually was responsible for breaking structure was in here. We have this pullback up. Price pauses in here and flips and takes out what? The liquidity in here that was built up. This is internal range liquidity. and all this was taken out by this reaction. So in a way, we could see this as a flip, and I think that's how I mark this out as. Let's see. We're going to do it like this. This was a demand flip. Price comes in, reacts, pushes up. We want to trade from the extreme, which in this extreme is, on a 5-second time frame, we want to just cover the entire little zone because it's not even very big. This is 0.7 pips of a stop loss. So since we got this aggressive reaction and push here, I think maybe even the 1 seconds, you can see it more clearly. Check this out, 1 second time frame, very clear. I want to tap this zone, right? This is what I'm focused on. So let's see if we tap this, right? From here, more than likely just to here. But, to be safe, we're going to cover up that high, right? But this is where I'm really expecting price to tap into. Let's go back to the 15-second. And then let's continue price. Let's see where it goes. Tap. Look at that. It tapped. How far did this go in? It went in 0.1 pips. We're on a 15-second. Let's go back to the 5-second. Look at how accurate this is. Price came into this 5-second order block that flipped, that created this break in structure and take of all this liquidity, this internal range liquidity. And then what do we have? We have price building up liquidity for inducement, because what? We don't have inducement in here. Price tapped, and now we're looking for price to trade away from that. Let's look at the 15-second. That's probably going to be a nice clean. So give it a second. 30 seconds. Let's look at that. And then we're looking for, do I have another entry? I think that was all 4 entries. Yeah, 4 entries. So now we're looking for what? My point of interest. So I didn't explain the target yet, but we're going to explain the target in a second, right? Let's go to the right, or to the left, sorry. We're going to go to the 5-minute. Now, remember that we were talking about this. Now, remember, usually we like to sweep Asia, right? So Asia usually likes to get swept. We already swept, let's see, this technically swept the high, or mitigated the high of Asia, or this was where Asia closed. So we swept the highs of Asia. We swept the high of the news in London. Now we're looking for what? This is the area where price accumulated. We got a push down here to what? Take liquidity. And price from here was basically pushing price all the way into this zone. This is where we got the tap of the point of interest. Now, in my case, what do we have? We have a lot of zones like this that I would want to be cautious about. Let's see. On the 2-minute, the 1-minute, let's see where we get the look here. On a 1-minute time frame, we have a lot of unmitigated zones. Now, while it might be insane to look at something like this, because I'm trading on the seconds time frame, I don't need a lot of pips. I believe my take profit was only about 13 pips, which is insane. But you can still hit massive RR with that, right? This was a mitigation that did not fully tap, or maybe it did tap, but I was looking for price to come into this area. This is kind of where I was looking for price to come in, sweep this, and for price to push down to here. Now, because I was trading news and I'm trading a very lower time frame reaction, price could very obviously come up to sweep here. I could have easily targeted this, but let's see what happens, right? I was happy with this type of exit. So back to the 30 seconds. Let's see what happens. We're now in with 1, 2, 3, 4 entries that we have here. So let's see what happens. Continuing. Build up of liquidity. Pushing downside. We're waiting for price to break this low. Here we are, continuing. We've now tapped this demand zone, pushed up, and we swept the low, and we are now out. We've taken profit of our trade. So we're now in profit from, let's see, I have the text here. Would be somewhere here. Well, I don't know where it is, but anyways, we made 15.2 R with a 0.9 pip stop loss. We made 11.25 R with a 1.2 pip stop loss, 9.3 R with a 1.2 pip stop loss, and we made 10.86 R with a 0 0.7 pip stop loss. Now, I was happy with that, but you could also have what? Push price to tap this zone. That would have been very clean. It would have been very likely to tap. Let's see what happens. Let's see if this would have gone tapped. In my case, during this time, I'm kind of like, what do you call it? This is during London the next day, so let's see what happens here. See, we're pushing down. We're building up liquidity. And what we could have seen is this was reacting to what? Something in here. And we're just trying to see. We already took profit. Our trade stopped here. We already took profit. We're trying to see what's going to happen next, right? I do remember that we got a very aggressive push up that liquidated all of these levels had we been waiting for this, right? See. So this is very sideways movement. It looks like we're building up liquidity. It's very corrective. This is not something that I like to see. And it's great that we took a profit where we did, because we would have been, although this is on a 30-second time frame, this is a lot of sideways movement that probably would have made most people uncomfortable. Let's see if we would have tapped this. We're technically still in that trade too. What do we get? So this probably these two swept all this internal range, came down. Let's see if we tapped, and done. Officially, another entry. You could have gotten another entry here. Unlikely that anybody would have taken another entry there after this buildup of liquidity. And now these trades are a lot larger. Now this would be a 20R trade. This would be a 14.67R, a 12.83, and a 16.71. So you can see the difference that comes in when you are trading lower time frames. The reality here is that we built a massive story on all time frames, from the daily to the 4-hour, to understand what price was doing on the higher time frame. We were building a story to explain what's happening as a reaction to what happened with the news. We created a sweep of the liquidity from the news, right? From that point of interest. And then what did we get? We got a change of character on the 15-minute time frame. That is very high. How would you say? Confluence, or very high reason to believe that we were going to officially switch short, right? And now for me, I wanted just to have price come in to tap this zone, because these two zones were going to be very interesting, because they were the ones responsible for running price long, right? And so for me, that's what I was interested on doing. I hit my take profit, I hit my zone, and I did it with great accuracy. Just some tips from this video in particularly: make sure that you are paying attention to the development of supply or demand chains as a reaction to news or from news, right? So that's what we traded. We were trading a reaction to the news events. Today's Thursday, this would be another trade recap. I traded the news live. This one, in this case, I did trade it, but I was trading the reaction on the previous day. I believe this was midnight on the 7th, and this was the reactions were also midnight on the 8th. So this was about 24 hours of a reaction to this news. I hope that you enjoyed this lesson. If you're going to take something from this, if you're looking at seconds time frame entries, just be very cautious and understand that a lot of times you can get swept. But having something like this, a 0.2 pip stop loss, would be absolutely insane, and could provide the craziest return that you've ever seen. You could have 100 RR trades very regularly. So I hope you enjoyed today's trade recap. I hope you took some of these lessons that you can apply to your trading plan, and I'll see you for the next one. Have a nice day, guys.